Well, to say the past couple of weeks have been trying would be an understatement. Nowhere has the coronavirus panic been more evident than on Wall Street, where stocks, of course, as we all know, have been in a free fall. So we have First Financial's Kurt Copenhaver here today, joining us for the scoop to try and calm our fears, right, Kurt? Because everyone has kind of been, I mean, it's been concerning this week, I think, financially. So the markets have been increasingly volatile lately, and so before we get into the backdrop, tell us why it's important not to lose proper perspective while investing.
Well, I mean, with the market going the way it has, it's tough to not be not to get a little bit emotional. But we really make sure our clients focus on having the right mix between stocks and bonds in their portfolios, and making that asset allocation decision the correct one really goes a long way in determining your long-term investment success. So that's determined based on each individual's own objectives and risk tolerance levels. Along with that, we make more tactical changes more frequently in our portfolios, overweighting certain market segments, underweighting others, depending on what's going on in the current events. So, I mean, we really probably talk about those tactical changes more, just because they are driven by current events. But it's those asset allocation decisions that are really key to long-term success.
Yeah, and like you mentioned there, it's more important to think about the long term, even when things are a bit tricky right now. So what can you tell us about what's been happening in the market recently? I
mean, honestly, we classify it as panic selling. It really all started late February. February 19th, the S&P 500 hit a record high. The 6 days after that, lost about 13%. It was the quickest 10% decline from a 52-week high since 1950. Since then, the selling pressures really picked up. We've dropped into bear market territory, the quickest drop into bear market territory since the 1930s. So we definitely classify as a panic selling.
Yeah, and we've been hearing that term bear market a lot this week. So what do you think is the likely outcome here?
Well, I mean, broadly speaking, we're looking at this more like just a pause in economic activity. Obviously, the coronavirus and the COVID-19 can have huge personal impacts, and we don't want to, gloss over those. But economically speaking, these viruses, history has shown that the economic impact is usually short-term in nature and kind of transitory. So we're, again, looking at this as more of a pause in economic activity. The question is, how long will that pause last? So there's really kind of two scenarios that can play out. Scenario one would be, the measures that the companies are taking, the government's taking, really stop the spread of the virus. If there's fiscal stimulus, the Fed monetary policy easing, that kind of gets business activity back to where it was, investor sentiment improves, then you'll see risk assets like stocks kind of take the lead and head higher. Second scenario, coronavirus lingers a lot longer. We probably dip into recession. There's probably significant damage in certain sectors like travel and leisure, those types of things. Investors probably pull back more, and then you'd have those safe haven assets like bonds start to outperform better.
Yeah, it sounds like you are well prepared to really advise everyone on the best measures, in this very vulnerable time. So how are you positioning client portfolios?
Now, coming into 2020, we adopted what we called a barbell positioning. So we were overweight certain riskier parts of the market, and also overweight some of the more conservative parts of the market in anticipation of a more volatile year in 2020. Our stance was predicated upon the fact that the business cycle is getting a little long in the tooth. Fed easing cycles usually introduce more volatility. Obviously, there's a presidential election coming up. There's geopolitical issues all over the world. So we thought all those would compound into a more volatile market. Obviously, we didn't see anything like this coming, but I think that with the barbell positioning, we're pretty well positioned for either of those scenarios I mentioned before.
Okay. A lot to keep in mind. Thank you so much for joining us again, Kirk. I'm sure we'll all be keeping our eyes on the stocks, on how to best position our portfolios. Thank you for joining us.